Stay afloat when the U.S. economy sinks. In this episode, I'm going to address taxes, inflation, and market volatility that will sink our ship. Get ready, I'm going to show you how to survive. Hi, I'm Doug Andrew, and I've been a financial strategist and a retirement planning specialist now for more than 47 years. And back in 2008, when many Americans were very frustrated because they lost 40% or more in the value of their IRAs and 401ks if they were invested in the market. It was the second time they had suffered a 40% loss in the decade from 2000 to 2010. And I released an ebook. It was actually done on a digital format, but I also used a printed format, and it was on how to create your own economic stimulus plan. Because back then, Obama was trying to pass all kinds of stimulus packages, trying to spend our way out of the recession. And it just added additional debt. And I'm seeing that happen again, like deja vu. So I wanted to share with you how you can protect yourself so that your ship doesn't sink, because I'm very passionate about helping people understand how to empower themselves so that when external forces we have no control over won't hurt us. So for years as a financial strategist, this is my caricature up here, I oftentimes feel like I have all this weaponry, this ammunition to help you fight the battles that we all face financially, like taxes and inflation and market volatility. And so many times people are so busy doing what they do, making a living, they go, oh, I'm too busy fighting the battles in life. I don't want to be talking to any crazy salesman. And here I am with all this weaponry, and they're trying to fight the battles in life with the old outdated armor and swords and shields. Does that make sense? So what I want to do is talk about how serious this national debt is. Now, a lot of times people have a hard time putting their arms or their brain around how much $1 trillion is. We hear it, and already Congress is asking, what comes after $1 trillion? So $1 trillion would be $1 bills lined up end to end, back to the moon and back 200 times. That's $1 trillion. And what we've seen recently is Congress passing stimulus packages because of the COVID-19 pandemic. We have seen infrastructure bills and also the COVID relief bills, and they are spending money like crazy that they don't have. They've already passed legislation that is double what the IRS collects in revenue in an entire year, and they're looking at passing another $6 trillion. So let me just bring this down to earth. Do you know that if you or I were to go out and we were making $100,000 a year and we spent $300,000 or $400,000 a year, year after year, how long could we get away with doing that? That's basically what the government is doing. So what is looming up ahead? So let's take Social Security for an example, because many times people don't realize the government owes over $130 trillion in future Social Security benefits from the people they've withheld that money from. They only have about 9 months cushion. In other words, if they stopped withholding Social Security, FICA from your paycheck, from those who are working, for just 9 months, they would be bankrupt. They would be totally broke. In fact, clear back in 2009 of October, it's the first time that they shelled out more in Social Security benefits to Americans than they collected. And so this has been sort of a train wreck waiting to happen. You know, when Social Security was first introduced, within a decade, there was one recipient every 16 workers. And then in 1986, it was 6 to 1. Do you know that in 2008 in America, there were 45% of Americans that were sort of tax eaters? They received more than they contributed to America. 55% were the taxpayers versus the tax eaters. By 2016, that had flipped. where we have about 55% tax eaters. They use more of the government resources than they have ever contributed, and we have 45% taxpayers. We can't keep going down this path. So as we talk about Social Security, we don't have 30 years. It could be broke within 9 months if we stopped withholding the FICA from people's paychecks. But we have a serious problem here. I call this ship the USS economy. And here we are sort of sinking with more spending, more debt by 3 to 4 times what we bring in revenue. How long can we keep doing this? This is like a sinking Titanic. And sometimes I think Congress is sort of rearranging the deck chairs on a sinking Titanic, the economy, thinking somehow that they are going to prevent this disaster from happening. Well, we've got to deal with reality, and it gets down to simple economics. What is the message here? If your outgo exceeds your income, then your upkeep will become your downfall. The way we're headed, if we simply went 1 year with our current national debt where we did not have enough revenue that we normally bring in tax revenue, if somehow there was a dip, the interest on the national debt, which is over $30 trillion, okay? The interest on the national debt exceeds what we bring in income. Just the interest, let alone the $3.5 to $4 trillion it takes just to run the federal government, let alone some of these other initiatives like healthcare and Medicare for all, and also student loan forgiveness and what have you. So what's the solution to this? The USS economy, I think, is on the brink of sinking, and it may revalue the dollar, okay, to where the dollar becomes worthless, and they maybe want to change the monetary system. But my goal is to help you aboard a lifeboat, to be able to survive if the economy resets and sinks, so that you are protected. You do not lose what you have worked your entire lifetime to accumulate, because I've been a retirement planning specialist now for more than 47 years. So what should you do? Now, if what I have shared with you is resonating, it has you concerned, and you can think of somebody who you'd like to share this video with, please share, post a comment, click like, but subscribe on 3-Dimensional Wealth, this YouTube channel. I post an in-depth answer to a financial question almost on a daily basis. And if you stay with me to the end, I would like to gift you a copy of my most recent best-selling book, The Laser Fund, How to Diversify and Create the Foundation for a Tax-Free Retirement. And you'll be able to go to laserfund.com, or click below, and you can claim your free copy. You just contribute a nominal amount towards the shipping and handling. They've been flying out of our warehouse, and this will give you the solutions maybe you're looking for. So let's talk about these big dangers. This spending, irresponsible government spending, and the printing of money causes, which inflation is a result of overspending and printing money to solve that. So what's going to happen here? Uncle Sam is going to have to take a bigger and bigger piece of the American taxpayers' pie. And we've seen that recently with the Biden tax proposals, where he is raising taxes from capital gain taxes, which are more than doubling, doing away with the step up in basis on long-term capital gains, raising corporate taxes from 21% up to 28%, which is not 7% more. It's 33% more in actual dollars corporations have to pay. If on every million of profit, a corporation paid $210,000, now they have to pay $280,000, $70,000 more is a 33% increase over the 21%. Corporations can't afford to do this. So they're raising the prices of goods and services, food, gas at the pump. Inflation is going to really hurt us. And so sometimes I get frustrated because a lot of politicians do not understand economics. And so here we are trying to have a robust economy. And a lot of times the legislators are holding us back from scoring the touchdowns we could otherwise be scoring. And it's going to cause some issues and problems here. So the 3 biggest dangers that I would love for you to eliminate is, number one, taxes will be going up because of this. The government has to bring in more revenue. They have to raise taxes, and that causes recessions and slow down unemployment and so forth. Inflation, because when you print money, you create inflation and the cost of goods and services goes up, and it doesn't do any good to raise somebody's minimum wage to $15 an hour because it gobbled up at the gas pump and when they went to the grocery store just to buy hamburger, okay? And then last of all, this creates market volatility. And so these are the three big dangers that cause most retirees to outlive their money. So the absolute best way to eliminate those dangers, taxes, inflation, and market volatility, is by using what I call the laser fund. It's my favorite financial instrument. It is the title of my 11th book. It's The Laser Fund. This book will teach you how to diversify and create the foundation for a tax-free retirement. And I'm not here trying to sell you a book. I will gift you a copy of this 300-page book. It's actually 2 books in one. If you're more of a left brain thinker, you read this white side, and this has all kinds of charts and graphs and explanations. But if you're more of a right brain thinker, you flip the book over to this book, and you read it this direction. This is 12 chapters containing 62 chicken soup for the financial soul stories. If you want to use your right brain and your left brain, read the entire book. But this will help you understand how to eliminate the dangers of taxes, inflation, and market volatility by putting your hard-earned money into a vehicle that passes liquidity, safety, rate of return, and tax benefits. These are the 4 pillars that will help you be immune from those dangers in your life. So click below, claim your free copy, contribute a nominal amount towards the shipping and handling. I'll cover the rest of that cost. I'll fire out a copy to you. There's also options there for you to, if you like to listen and learn or watch and learn, for additional information and resources to empower you. Here's to your brighter future.